Hello, everyone. I hope that you had a wonderful trading week and a wonderful week overall. So this week was a fantastic week, right? In terms of our analysis, which is basically the thing that we are focused on, right? We want to know where price is going to go. Because once we know where price is going to go, then trading will be the easy part, right? That's correct. So exactly what we expected to happen Monday happened, which was the Monday one shot, one kill, right? So that's not the typical one shot, one kill, which, that would be just trying to find or locate the high or low of the week. The Monday one shot, one kill is locating the high or the low of Monday, right? So there's a difference. Just as how every other day, every single day has its own one shot, one kill, right? So basically, you already know what that is, and we're going to go deeper into it, and we're going to investigate, everything that led to that, right? It's just, sequential SMT between the current the current weekly cycles Monday and the previous week of cycles Friday, right? So we stated that the best days to trade this week, which is usually the case for every first quarter of the month, right? It's Monday, Tuesday, and Wednesday, right? Not Thursday and Friday, even though there will be, volatility on Friday, right? The best days to trade are Monday, Tuesday, and Wednesday. And just looking at that, what does that mean? What does that say? Does it mean anything? Yes, it does. Due to the fact that, right, we have this high impact news event on Front Payroll, right, which is usually not the best time to trade, but it will yield us some volatility, which we can pay attention to after the news event has been, released. Monday, right, is usually the best day of trade. So during the first quarter of the month, and this is something that you must pay attention to and something that you must study, right, to see that, it usually happens. It's not just random or anything like that. Whenever there is sequential SMT, right, or the Monday one shot, one kill model, which, occurs between the previous week's Friday and the current week's Monday, that will usually form, the higher low of the day for Monday, and sometimes the higher low of the week. So right now we'll be going into the price action of the FX triad, right? First, let me go to the forward time frame where we can, pay attention to the monthly, sequential SMT of the previous month, which, gave birth to this leg of price action, right? So looking at the previous month, right, the price action of Q3 and Q4, it is very obvious, right, to see that we have sequential SMT here, right? We have the dollar, right, running above the previous week's high last week. And remember, right, Q4, remember that Q4 is the best, one of my favorite quarters. Why? It's made for reversals, right? Okay. The euro, you can see that we ran below this low. But for the Great British Pound, we did not go below this low right here, right? So this is the reason why, we had all of this uptrend in regards to the British pound and the euro. And this is why we had the dollar index falling, right? So remember, right, before, right as the week began, and looking at the US dollar index, when price was, if you're looking at my cursor right now, when price was literally around here, right, we expected lower prices, right? And remember what I said. I said that the only reason why, we would expect price to go down would be why? If we had sequential SMT here, right, which occurred between Friday, the previous Friday's high, and the current Monday's high for the US dollar index. So here, right, we'll dig deeper into this. And remember, once again, this is not, just, us talking about hindsight data. We never do that. If we don't talk about, the movement beforehand, then we don't have anything to talk about, because it doesn't make sense to talk about something that you didn't see, right? And don't trust anyone that, claims to be able to, read price action and then, tries to do that, set thing. So this right here, which is Monday, right? Looking at the bottom of the chart, now I'm looking at what? The US dollar, right? So, and I can make it easier for you to see, right? This time, right? This segment of time right here is Monday. The previous quarter is Friday, right? And this, remember, this is a model in itself, finding the high or the low of the day for Monday, right? We had the US dollar index fail to break above Friday's high. Then we had the euro fail to break below Friday's low, right? But then we had the British pound trade below and close below the previous close of Friday, right? Right here, you can see that the open and close of this candle right here is the same, right? So when price closed, it just closed with wicks, right? This in itself right here is, a precision swing point. And this is due to the fact that the candles are unbalanced between the British pound and the euro, right? At all times, we should have price being symmetrical between the euro and the British pound, right? Right? But here you can see that this was not symmetrical, right? And then afterwards, you can see that we had the swing point, right? This swing point right here for the euro being to the right of the candle, which, gave rise to the precision swing point of the Great British pound, right? So again, right, these candles right here, both of them give rise to a cracking correlation in itself, right? So this is not sequential SMT, right? This is a cracking correlation between swing points. After a precision swing point has already been established in the Great British pound, right? So when we had this candle right here for the euro form, after we had the candle which traded below the previous Friday's low this Monday for the British pound, right? Sent price higher, right? Here would be, the perfect where I saw a lot of you getting in right here, which is, good that you took note of the precision swing point, right? So now looking at the euro, and I'll make this a little bit clearer for you, right? So this candle right here for the euro it's not a swing point, right? This one is, right? So when this candle closed here, right, with this candle in the middle, looking at the Great British pound right here, right, and one to the left higher than the one in the middle, and the one to the right also higher than the one in the middle, this became a precision swing point. But due to the fact that this candle right here, right, it was not a precision swing point. Once we had this one trade below this one, this would be a high probability, you know, run on liquidity, which should cause price to reverse due to the fact that we already had something pointing to the reversal of price, which is the sequential SMT right here. Right? Remember, while price was here, what did we want to see? Higher prices, which we did, in fact, see. Here, right here, this is a precision swing point, right? Right here. This candle right here, and now we're looking at the US dollar, right? So this candle right here, this is a precision swing point. And pay attention to where this one forms, right? It is the last candle of Monday and the first candle of Tuesday, right? And Tuesday begins actually at the opening of the Asian session on Monday if you're, focused on Eastern Standard Time, right? Right here, and we're looking at why we had price really back here. Right here, in the dollar, we had price fail to break below this low. In the euro, we had price break above this high. So this right here, is partial sequential SMT, right? It's not, as high probability as one would like, but it is why we had price break below here. And it's usually short-lived, right? It's usually short-lived, but it's what caused the reversal. And the reason why this would be seen as partial sequential SMT is because the low of the week for the US dollar, the high of the week for the euro, right, is what? A precision swing point. Also, you can see, something similar to what we just took note of here for the euro, right here. So this candle right here for the euro, right, is what? This right here is the same thing that I showed you here for the low of the week. Do you see? It's the same thing. We had this candle right here trade above this candle, the high of this candle for the euro. Here, for the US dollar, we did not trade below this candle. So that in itself is a cracking correlation. And pay attention to where the candles form. Like, remember, pay attention to where the candles form. Right? So the precision swing point here was left alone. Price did not return to it. And it's not an order block. Right? Price traded down, failed to touch it, rallied up. Here in the euro, what happened? Price traded above it. then collapsed. So now, remember how we determine we determine the high, the low of the range, right? So this right here could be the high of the range, right? For the euro, right? So any pullback within, this string of don't close candles, if price went above 50%, that would be premium, right? Correct. Also, right, you can see that, remember how we talked about, how we determine our ranges. So now this is the high of the range for the US dollar, and this is the low of the range for the US dollar, right? This is a precision swing point, and this is also a precision swing point. Look at the euro. Not the euro, the Great British Pound. Do you see it? Yes, it's there. Right? So this candle right here, right? And don't pay attention to, the wicks right now. We're looking at the bodies of the candles, right? But due to the fact that, in the euro, not the euro, the Great British Pound, right? The bodies are, the same price that we close here, the same price we open here. We can just use this one. If we went to a lower time frame, it would be easier. I can see that the same thing happened here, right? So this is also a precision caused by the precision swing point, right? So what happened here, which, is important, is that we literally, right, cut above this candle, right? That's what happened. Just exactly what happened right here, right? We cut above this candle right here. Meanwhile, whatever was going on here, right? And then this, it's not SMT, but it is a cracking correlation, which we will touch upon. And this is how we get these ranges, right? Remember. And the most liquidity rests below these ranges, right? Remember what I just said, the most liquidity rests what? Below these ranges. And make sure that you're using the same brokers that I am, right? Capital.com for the US dollar index. And I use FXCM for the euro and the British pound, right? So this is just us, touching upon price action. Anyways, here, right, there's a precision swing point here. You can see that price ran below, then returned back into the range. And that's due to the fact that, right, also, right, we had, sequential SMT here. But the liquidity below precision swing points is immense. It is a lot, right? It is a lot. And this down close candle here, as you can see, right, which is the low of the day for the euro, it is a precision swing point as well. Do you see that? Can't make this shit up, right? Literally can't make this shit up. This down close candle for the euro, that's a precision swing point as well. This candle right here, which pierced this precision swing point and returned into the range. Also, we had sequential SMT, right? Price failed to take out the low of yesterday in the British pound, but in the euro, it did so. Also in the US dollar, it also did so. Right, and you can see that the precision swing point, right, was the high of the day for the US dollar, it was the low of the day for the euro, and also the, caused, this expansion like in the British pound. So you can see that, right? The precision swing points, they can be used for many things. Identifying ranges, spotting the low or higher days. Usually whenever we have sequential SMT and we have a precision swing point follow, you don't really need anything else, right? And remember, pay attention to what happened here, right? Even though this candle, looking at the Euro USD, even though this candle right here, caused the precision swing point in the Great British Pound, it wasn't long. But there was a correct correlation between the candles. Why? Because they should be the same. Right? This was a delay in price action. Right? So here, when you see this happen, you can expect the next candle for the euro to do what? Be the low of the day, or the low of the session, or the low of the 90-minute cycle that you're, trading within. And remember, once again, right, I gotta keep saying this, it's not hindsight, because it looks like hindsight, even if you missed it and you don't want to watch the previous stream, then you're gonna be like, then he's just talking about, we talked about all of this before it happened. And we expected it to happen, and we did the same thing for the index feature as well, which we will go to next. So currently, what do we have? We have liquidity below this low, right? The US dollar, liquidity below this low right here. And let me annotate it. So right below this low is external liquidity, right? Above this high, we have buy side liquidity, external liquidity as well. Right? What would, cause us to see a reversal? You already know. It's not just, price trades above this, I'm going to short now. That's not what it is, right? You need to see sequential SMT, right? So this right now is the range that we're working within. And it's Wednesday, right? And also, most of what we expect to happen already happened. So, unless you see something really clear cut, don't stress yourself, right? Right? So this is what we are within, right? And now at the moment, you can see that we are within a range for both. We are, consolidating, and this is what we want to see, right? We already got a move. And now the fact that we have price consolidating right now shows us that, or this is telling us that what? We will be getting some sort of volatility pretty soon, right? So once there is sequential SMT, what will happen? There should be a precision swing point after that. What? If all of that is confirmed by intermarket sequential SMT, price will reverse as it always does, right? Now looking at the E-mini S&P and the NASDAQ, and today we have the US dollar right here, right? Due to the fact that, remember that I said that we are not focused on what? The E-mini S&P 500 and the NASDAQ, right? Due to the fact that the Dow is totally out of sink, right? And also, it is, extremely weak and won't give us the volatility that, we need. And also, we don't trade it. We just use it for, bias. We don't trade DAO. We never trade the DAO. So here, this red box right here, do you know what this is? Do you remember what it is? This is a precision. What is this? Let me ask what it is. Right? The level between a higher time frame PD array and a true open, which, right, this is a true month open of the previous month, the previous true month open. So this is a precision level, right? So we had price trade into right here. This was a weekly fair value gap, which we did highlight last week, right? And we did highlight this Sunday, not previous Sunday. So the price trade into the weekly fair value gap. What happened afterwards? And right, this is a setup in itself. And remember, we talked about this before it happened. Right? Literally, it's not. It seems like if someone else watches this, they're gonna be like, "Oh, that's sinusoid. You can't do that." Yes, we can. Right? So we had what's this sequential SMT between Thursday and Friday last week, right? Due to the fact that that happened and we traded below the true month open last week, right? We're in a new month right now. And this is something that, you should take into consideration, right? Whenever, hope that you're writing notes, right? Whenever, we're within the first week of the month, whatever price action, that was or gave rise on within the previous week, which is Q4. So if we end Q4 on this candle right here, right? Or this candle right here, what did this mean, right? It's prone for reversal. Reversal in Q1 gives birth to continuation. Reversal in Q4 gives birth to continuation in Q1, right? So we're going to get expansion, which is what we got, right? So here, right, you can see that we had Monday's range form. And if we don't pay attention to this wick right here, looking at the S&P 500, you can see that we closed below Monday's close on Tuesday. What would that be? Manipulation. So we have A, M, this would be the true open, right? This would be the true open right here. Let me put the true open right here. That's the true open, right? We traded below the true open, then expanded. Right here, we have this fair value gap. Why didn't price return to this fair value gap? Even in the NASDAQ, we did not have price return to this fair value gap. Why? That's due to the fact that we filled this larger fair value gap already, right? Whenever we have price fill fair value gap, the upcoming fair value gap afterwards will more than likely not get returned to, which is, a breakaway gap, which I believe that I've spoken about already, right? So, yes, we wouldn't expect this gap to be filled, right? Also, right, if you look here, you can see that we had a cracking correlation between this high and this high, right? right here. We had a cracking correlation. Was this sequential SMT? No, it was not. And that's why it failed, because it wasn't. So this is a real breaker. Look where, these candles are. This is the breaker right here. These group of 3 candles. And now we're looking at the mini S&P 500, right? Everyone, literally, people on Twitter, they claim that they know what quarterly theory is. They have no idea. They wish. Let me just right here, so if someone like screenshots it, they won't understand. So here, right, we had what? Sequential SMT, right? And at the top right here, what was this? Yes, it was a cracking correlation, but it was not something that causes a reversal. It just causes a protraction phase, right? Which returns price, right, to rebalance this gap right here. Okay, before we touch more upon this, right, looking at the S&P 500, let's go to the NASDAQ and look right here, right? This order block right here, quote unquote order block, whatever that is. So this order block right here, you can see it right here. Before price returned to it, there was no gap, right? There was a gap here. Again, this is another crack in correlation, right? Yes, it was another crack in correlation. Why? Because the same thing that happened here did not happen here. And the only time that you will have price just going in a straight line, falling and falling and falling, is when there's no cracking correlation. Once there's a crack, price will turn around. Also, these highs right here, right? Remember, these highs had to be taken out. Why? Because of this right here. This satisfied the algorithm, right? Basically, it's like we have, pressure building in between this high and this low, between the sequential SMT and the market structure shift, right? So pressure builds in between these 2 points. And this is where price actually gets, this is where the, market accumulates in between this area right here. Same thing on the daily time frame, weekly time frame, monthly time frame, every single cycle is the same thing. So between this low and this high, after we had the market structure shift, and remember we talked about this before, like you can say that we don't talk about this before. And we talked about where we want to see price go. And I always say what? You need to wait for a cracking correlation. So here, this in itself was a cracking correlation. We already had sequential SMT here, but once we had the structure shift here, we didn't have one here, right? That's a structure shift. Immediately, this, should be going into your, eyesight as liquidity, right? This is a failure swing, which was not caused by sequential SMT, then it's not real. And it's as simple as that. What happened? Price fell back. There was no gap here. There was a gap here. Then what happened? Price expanded. Here, for the US dollar index, right, we had intermarket sequential SMT, right? So this is intermarket sequential SMT. And here was what? Sequential SMT looking at the US dollar. So here we had doubling theory playing in again, which, as I said, usually forms higher load months. Happens, for the weekly cycle, but the weekly cycle, takes order from the higher time frame cycles, right? So we did have sequential SMT here. And then here, again, we had sequential SMT. And what's this? Intermarket sequential SMT. Price fell. Here, we were bearish. Why? Because there was no bullish sequential SMT. Right? We did not expect price to go back here. Why? Because it didn't have to. It wasn't supposed to, because it's not programmed to do that. Price only changes direction when there is a cracking correlation. Price decides to do something when there is a cracking correlation. And if the current, the cracking correlation is not reflecting upon a previous quarter, immediate previous quarter, then it will not work. This high right here is the high of Friday, previous Friday, and this high right here is Thursday. Right, this candle right here was Thursday, right? Here, looking at the E-mini S&P, this low is what? Friday. This low right here is Thursday, right? This low. Price traded below this low. In the US dollar, it did not trade above this candle. At times, right, it doesn't really matter about the high, if it's a high or low. It just matters if, price trades above the candle or even touches the candle, which is something that we will get to once we fully understand this, right? Whenever you have the doubling effect of sequential SMT or intermarket sequential SMT or both, that gives price the long-term reversals. That's where price really turns around, right? And that's literally, this right here is literally what we use to, identify this drop in price. That's literally, there was nothing here that signified that price should be, running above these highs. It shouldn't happen. It just shouldn't happen. And it's as simple as that. Right? So remember, pressure builds in between these types of, fake sequential SMT or just regular quote unquote SMT, which usually gets everyone tripped up. They say, oh, SMT doesn't work. Because you didn't see the sequential SMT below. You didn't see that price traded into a precision level, then reversed. You didn't see this cracking correlation that happened here. And that's why people usually get tripped up. So I hope that you guys, took something from this. I gave you guys the information when Sunday, and that's always what I will do. And this is how I will teach. And this is how, it is, this is just how it is. You just got to accept it. You have to pay attention, right? What do I point towards? I'm going to talk about the specific level. And for price to go there, the things that we study, the things that we usually expect must happen. It's not going to just turn around on a dime like that. No, it's going to be a cracking correlation. You got to sit and you got to study. And that's what it is. There was like, there were like a couple, 20 people or so that, left over the past couple months or so. They're like, oh, you don't hold my hand. I'm not going to do that. Well, I already do that, but I give you the tools. I tell you where it's going to go. I tell you what I expect. Our accuracy is insane, right? And that's how you're going to learn how to read price. I hope that you found this useful, and we will be back over the course of this weekend. Right? Next week, we will, be talking about more, technical things, more technical concepts, and you will need to understand this. And you will need to understand everything from the previous live stream, or else you will literally be lost. Hope you have a good day, and we will talk.